Let's get in Nikhil Nigania, the director at Bernstein. Firstly, Nikhil, NTPC Renewables IPO is opening today or has opened today, and you were one of the analysts who was not recommending that one should go ahead and separately list NTPC Renewables. What was your rationale behind that? And given the fact that now it's happening, what would be your suggestion to investors at this point of time?
For sure. Thanks for having me on the show. Firstly, regarding our view on listing NTPC Renewable separately, as you rightly said, we have written on it multiple times. Fundamentally, if you think of it, right now, the way the business is structured, that the coal business is generating all the cash, which can be used to fund the entire capex of the renewable story for the years to come. If you separate them out, list them separately, then this chain sort of breaks, uh, which is why we felt that having them together as one entity would have been better. We have seen instances of that in Europe as well, where I think about 3 or 4 companies listed their renewable arm separately, and most of them have taken it back into the parent for the same reason that a renewable business by itself finds a need to constantly raise funds to grow, and having it part of a larger parent can help fund that growth. So that's our fundamental view. Obviously, there's a flip side to the story as well. There's a second school of thought on this as well. Renewable is a strong thematic play. We have seen multiple renewable IPOs happen in India over the last few months, and many of them have been a good success. So, given investor interest in this theme being strong, and not too many large green utility plays available in India, uh, foreign investors especially could have good interest in this story. So these are the two sides of the NTPC listing. We obviously fundamentally we have shared our view on why we think having it together would have been better. Now to the second part of your question, now that it's happening, what do we think about the parent, which we cover? We continue to be positive on the parent. Our story on power sector is of accelerating demand, evening power shortages, and energy transition being a big push from the government. NTPC continues to be a play on all those themes. It still trades at about 15 times earning, and even considering a holdco discount on the green listing, and given it's coming at it's raising money at good valuations. It seems it's not as bad as we had initially thought of it to be. So we continue to be positive on NTPC as the parent entity.
Okay, positive on NTPC as a parent. There could have been a better way of perhaps unlocking value as far as the renewables bit is concerned. But for now, that's the verdict as far as NTPC renewables is concerned. But Nikhil, the other big talking point is what's happening in the solar PV manufacturing setup. And that's because with the Trump presidency coming back, it's expected to cause a bit of a shift as far as trade paradigm is concerned. What's your sense as to how the Indian solar PV manufacturers are placed within this context?
Sure, Anisha. So if you think about the Indian solar PV manufacturing industry, it's possibly having the best time of its life, is what we feel. Because other than China, the second and third largest solar power markets in the world are US and India. And China produces about 90% of the solar panels, cells, wafers, etc. of the world. And both US and India are not too keen to import from China. So Indian solar PV manufacturers are in a very sweet spot. To put simple numbers, a solar module, which is essentially a commoditized item, sells at about 10 cents per watt peak globally. In India, the pricing today would be about 16, 17 cents per watt peak. And in US, it is as high as 25 cents per watt peak. So the domestic manufacturers are in a very sweet spot that weighs from a 1 to 2 year horizon. So that's a near-term perspective where we think the earnings should be good for solar PV manufacturers in India. But if you look at the story 1 to 2 years out, we see a high possibility of a supply glut coming up in solar PV manufacturing in India. Many players are looking to enter in this space, and especially much larger players than those who are listed right now. And even on the US part, due to the Inflation Reduction Act Joe Biden has introduced, there is an incentive to produce solar cells and modules in US itself. Yeah. Now with Trump coming, it remains to be seen how does that story change. But either way, I think a rational decision, even from US part, I'm not sure if it, whichever way that it would take the decision, importing panels at 25 cents when they're available at 10 cents, I'm not sure how long it will last, that story. So near term, it looks solid, but medium to long term, we see a supply glut and even export story weakening for this space.
Okay, so that's the take coming in as far as the solar setup is concerned. But wanted to get a better sense from you regarding the overall renewable bit as well, because whether you look at NTPC Renewables or Adani Power for that matter, or the way we are seeing things progressing into the entire battery storage, green hydrogen. But do you think these are the areas, including even JSW Energy? Do you think these can be the growth areas going forward? And if yes, which do you think is likely to be the winner amongst this lot? Because there has been a lot of chatter about a green hydrogen and a battery storage of sorts, but do you see actually that culminating into good numbers?
Sure. So if you look at the power generation mix of India right now, out of about 450 gigawatts of generation, solar, wind, hydro, and nuclear would be about 200 gigawatts. Going forward, the aspiration of the government is to take this number of 200 gigawatts to 500 by 2030. To support renewables, obviously, you need supply coming in the evening hours as well through either thermal or battery storage. Now, battery prices have become very cheap in the last year or so, given the massive capacity that China has built to manufacture batteries. So going forward, our view, we think the ambition of government to reach 500 gigawatts is definitely a noble one. And we, as per our estimates, we should be able to reach close to 400, 450 gigawatts against that renewable target. And in terms of complementing renewables, the technology needed, whether it be batteries or thermal, earlier we had a very strong view in favor of thermal, but with battery prices moderating the way they have in the last 1 year, we think battery will also have a good role to play in meeting India's evening power demand.
Right.
So now in terms of how to...
Right, Nikhil. And before we let you go, one question on the power financiers. Both REC and PFC have seen a meaningful correction in the last 1 month with the market correction that we had seen. Anything that has changed fundamentally for them post the second quarter numbers, or everything still stable and your outlook continues to remain the same?
So PFC, REC, we continue to be positive. We have meaningful upside on both of those stocks in our target prices. Our thematic story on them has not changed. Our thematic story is massive power capex, which will drive loan book growth for these entities. Our thesis is evening power shortage will drive reversal of provisions for these entities. That stays intact. The reason we felt they corrected was a bit of a narrative change, given there was news of them giving loans to infra players, private infra players, and even telecom players, which goes outside their area of expertise. So that was a risk which we think led to the sell-off. Beyond that, we don't see, and recently the earnings call, they clarified that. So both those events are not happening. Neither are they lending to the private infra player or to the telecom entity. So with that, our thesis is completely intact. We continue to be positive on them and think they trade quite cheap compared to where we are in the cycle in the power sector.
Okay, have meaningful upside on those counters. Nikhil, on that note, we let you go. Appreciate you making time and speaking with us today. So that's the holistic view on the power sector.
If you like this video, then like, share and subscribe to ET Now.